Mic check, 1 2 1 2. Mic check, 1 2 1 2. Mic check, let's get it, baby. Let's get it. Everybody, somebody said, Keenan about to come in here yelling, I'm not happy. Yo, y'all funny. Look, family, let me know if the mic is working, baby. Let me know if the mic is working, baby. Let's get it. Mic check, 1 2 1 2. And everybody that just got in, let's do something for the people that's getting here a little late. I want you to do this, family. I want you to do this. Right? Wow. In the comments, right? Right? Wow. So then when they get in here, they can be like, wow, what? Wow, what? Let's see how many wow whats we could get. I want you to write wow in the comments. Let me know if the mic is working. Right? Wow, wow. Let's see if we can get them to say wow what. Let's see. Oh, you can't see that? Here we go. Wow. Let's see how many wows we can get. I want to see how many people rolling here saying what. Let's see. Loud and clear. Let's get it, baby. Let's get it. Let's go. Ric Flair, baby. Woo! Somebody said, keep about to come in here yelling. I'm not having it. Wow. That's good. Yo, I can't believe that. Wow. That's crazy. Wow, that didn't happen. Wow. Yo. That's crazy. That's crazy. Oh my goodness. Whoa, oh my god. Whoa, oh wow. Yo. Whoa. Somebody said, why y'all screaming really? Wow. Oh my goodness. Wow. That's crazy. Yo, somebody said I couldn't read it. You missed it. Wow. Yeah. Yo, that's really crazy. Come on. Oh my God, that's crazy. What? Oh God, man, yeah, look, I'm gonna have to turn the AC on today, man. It's getting hot in the kitchen, baby. It's getting hot in the kitchen. It's getting real hot in the kitchen. Wow. Somebody said, man, I'm lost. You missed it, man. Wow. That was crazy. Yo, somebody said hey, man. Oh man, look, I gotta. Yo, yeah. Somebody said I'm about to replay. Yo, that's really. Oh my God. Yo. Yo, if you just getting in. Oh man, look, it's a good day, baby. It's a good day. We in a good mood. You already. Somebody said, wow, what? Hey, listen. Yo. It's a good Monday, baby. We in a good mood. You already know what time it is, baby. You already know what time it is. Yo, that's really crazy. Somebody said replay. Yeah. Man, when you replay it, you're gonna be like, wow. Okay, let's get it. Ed, shout out to Ed. Wow, right? Isn't that crazy, Ed? Yo, oh man, right. Listen, this is not financial advice. That's crazy. All right, family. Look, it's Monday. Let's get it, baby. Let's get to this money, family. You know what I'm saying? So, like I said before, this is not financial advice. I just hope you bought your oven mitts, baby, because it's about to get hot in the kitchen. Now, don't invest in companies you don't believe in and don't understand, because if they dip, you're not gonna buy the dip, and then you're gonna sell low. flow and be right back here crying to me, and I'm not having that. So if you can't do the heat of these hot stocks, then stay out of the kitchen and consider investing in the index funds. Now hit that like button to show your boy some love. Hit that notification bell to stay tuned. Let's get straight to the point. Subscribe to the channel. And the first banger on the list is the one, the only AMC Entertainment, ticker symbol AMC. And at the time of this recording, somebody said the inside joke is, come on, you telling everybody, come on, man. The one, all right, let's get it, baby. AMC is currently, at the time of this recording, it is currently $44 a share. But guess what, family? We still in a pre-market, baby. We still in a pre-market. You already know what time it is, baby. You already know. And if you was rocking with us last week, you already know how we got it to run up from 38 all the way to like 49. We put some tears in the chat. The OGs already know what time it is. My guy Gabe, always showing love. Shout out to you, big dog. He said this. He said UFC at AMC was on point. The crowd was going nuts. And he said he made a few friends there. That's what's up, big dog. You actually went. You actually went. That's what's up. That's what I'm talking about. That's what I'm talking about. He said he also saw somebody that was subscribed to the channel. That's crazy. That's crazy. Let's get it, baby. Let's get it. Let's get it. All right, so here we go. Now, AMC, at the time of this recording, like we said, is currently $44 a share. So let's see what a previous high was. So a previous high point in today's pre-market, we already know the market opens at basically like 4 a.m. So we got to about here, which is in the $45 range. However, remember, when the market opens in like 7 minutes, we're going to get an indication of what's going on. Because notice that in the pre-market, it's coming down. But this could be a huge blind opportunity, family, for everybody else. For everybody else who basically is ready to load up on a dip. Now, if you just getting in, family, again, you already know. We know where you going, but we want to know where you from, baby. Let us know in the comments where you from, baby. Let's get it. Let's get it. Let's get it. So I see Long Beach, California is in the building. I see you. I see you. Somebody said, I went back into the building. He said he wanted to see what we was wilding about. Let's get it, baby. Somebody said, let's get it. Discord family in the building. Much love, much respect. Let's go. Let's go. We got Maine in the building. We got Puerto Rico in the building. You already know, family, this is a roll call. This is a head count. Let us know where you from in the comments, baby. Somebody said Keenan House. Let's get it. Let's go. Somebody said Westbrook, Connecticut. I see you, baby. Mississippi, we in the building. Oh, yeah, we got everybody is in the building. We got Long Island. Rhode Island is in the building. Puerto Rico in the building, baby. I see Dominican Republic. Shout out to the DR. Let's get it. Let's get it, baby. And we got New Jersey in the building. We got Florida is in the building. Cincinnati is in the building. Let's go. Here people still saying, what is y'all saying wow about? Hey, you missed it. Yo, we got San Jose in the building. We got Seattle in the building. We got Philadelphia in the building. We got Chi-Town in the building, baby. Somebody said, oh my God, I missed the joke. Man, hey, it was crazy. It was crazy. You got Dominican Republic in the building. Texas in the building, Seattle, we got Chi-Town in the building, Indiana, I see you, baby, Jersey, Orlando, oh, they rolling in, let's get it, baby. Somebody said they from the Congo, let's go. Somebody said they from San Diego, Cincinnati, Virginia, they from New York, the Big Apple is in the building, Buffalo, New York is in the building, I see Texas, I see Maryland, Ethiopia, Louisiana, we all over the place, baby. I see Wales, somebody's from Oman, let's get it, baby, South Carolina, oh yeah, baby, this is a roll call. This is a head count. Let us know where you from if you just rolling in. I see Little Rock. We got a lot of people from Baltimore in the building. Mexico's in the building. Columbus is in the building. Somebody said, y'all missed why we was saying wow is in the building. We got Maryland in the building. Atlanta. Somebody said they from Samoa is in the building. Let's go. England. Shout out to England in the building. We got the UK in the building. I see you, baby. I see you. Somebody says Spain is in the house. Let's get it. Finland is in the house. Let's get it. Let's get it. Yonkers, I see you. Dubai in the building. Ohio is in the building. Oh, I see Delaware is in the building. Major salute. Shout out to Delaware, baby. Let's get it. Let's get it. Much love and much respect. And then somebody, Courtney, much love, much respect. Courtney said I asked about the new strand of the pandemic. And let's see. Let's see. Will it be delayed? Listen, we got to find out, baby. We got to find out. I got Sacramento in the building. I got Sacramento in the building. Tennessee. Peru is in the building. Oh, yeah. Somebody said Los Angeles. I see you. I see you. Iowa. I think Iowa's a new one. Russia. That's definitely a new one, baby. Let's get it. Singapore. Great Lakes. I see you, baby. I see you. Let's get it and let's go. Let's get it. Let's get it. I see you. Let's get it. Somebody said East Haven, Connecticut. Shout out to y'all, big dog. Shout out to Canada. Shout out to, I see Yemen. That's new. That's definitely new on here, baby. Let's go. Let's get it and let's go. Now, we got the market opening, family, in like 3 minutes or less. And already we see a green candle. Hopefully we can see a reversal and then we can see a bit of a run before the market wake up, baby. Now let's get it. So let's talk about it. Let's go and see what Nio is doing, family. Let's take a look at what Nio is doing. So right now on the day, basically in the early pre-market, Nio got up to the point of basically 46 in the pre-market it's looking like. But then it came all the way down here, right back to just about 46. So 46 might be a support line for us today in the pre-market if you are looking to load up. But I would say give it a little bit of time. Let the market open up and be like 15 minutes or maybe even 10 minutes or so. Let that first couple of candles get out. So then, bow, we can load up. When we see a price we like, we strike, baby. I see Tennessee. I see Waterbury's in the building. I see you. I see you. Let's get it. Let's get it, baby. Oh, yeah. You already know what I'm talking about. Now, I want to show you something, family, because we talked about this not too long ago. Because, again, you're investing into a company, and I want you to basically understand what's going on with your company, because somebody asked me a really solid question, and let's answer it right here, right now. Somebody asked me a very extremely solid question, and this is in my last video or the video before, one of them, but this was a huge solid question. So let's take a look. Let's take a look at this. So we know that we're investing into AMC, the large majority of us, right? So, okay, most people don't know that Vanguard has the largest position in AMC currently. Look at this. Look at this. According to CNN Business, Vanguard has the largest position in AMC currently. Take a look. Vanguard, as of last quarter, when they last reported this, shout out to Haiti again. If you just rolling in, let us know in the comments where you're from, baby. It's time to wake up. So let's get it. We got Vanguard. They got 8.2% of the entire company. 8.2% of the entire company. They could have more now. They could have slightly less now. I want you to notice that, family, because they picked up how many? They picked up 29 million shares. 29 million shares as of the last quarter they reported this. Now, that means that Vanguard, look at this. It says they own 36.996 million shares of AMC. Vanguard, not Citadel, not all of these other places. Vanguard, family, Vanguard. So now, somebody else tried to ask me, right? Somebody else tried to ask me. Hold on, I just got a text. Let me check this real quick. Yeah, somebody else tried to ask me. They were like, Keenan, why do you keep saying that AMC has 24 million shares outstanding? Why do you keep saying that? Right? So let's just go to the facts right now, because those who've been rocking with me, you already know what time it is. You already know what time it is and why I've been saying that. You already know. So here we go. Let's prove that they got 24 million shares outstanding literally right now. Let's prove it right now. Here we go. That's a great question. Somebody said, take a look at who owns the most BlackRock or Vanguard stock. That's a very solid way to think about that, baby. It's market open. Let's get it and let's go. So take a look at this. Take a look at this. So Keenan, why are you saying that AMC has 520 million shares outstanding? Because guess what? When I went to school, they were doing this thing called math, and I was paying attention. So take a look at this. This is the notice for the annual shareholders meeting for none other than the one, the only AMC Entertainment. And it's going to be held on July 29th. This is the official statement that they sent, right? You remember, those of you who've been rocking with us, they basically said, Keenan screaming at me at 6 a.m. is better than coffee. Let's go. Let's go. That's what I'm talking about. I see you, Arkansas, in the building. But take a look, family. Pay attention to this. How do we know that AMC has 524 million shares outstanding? Because they sent us an authorization not too long ago. They took it back, but they sent this, and it said if they authorize 25 million shares, the total amount of shares that AMC will have is 549 million. 549 million. If we get an additional 25 million, let's do something that I like to call math. 549 minus 25. Remember, the units are in millions, baby. The units are in millions. What does this leave us with? 524 million. 524 million. This is the amount of outstanding shares, the shares totally, that AMC has, baby. That AMC has. Now, somebody said I was paying attention. You already know, big dog. We already know what time it is. I see Connecticut's in the house. Let's get it, Leroy. Let's go, baby. Let's get it. All right. So now that we have that under our belts and we ready with a little bit of math, I hope your head didn't break listening to that. So now that we got that going, I want you to think about this and pay attention. Pay attention close. Vanguard, we now know that Vanguard has 36.9. You could basically add in a few thousand shares and then like almost 4,000, less than 4,000, right? You could add in basically 3,200 shares, and then boom, they got 37 million shares, right? Look at this. They basically got 37 million shares right here. So Vanguard has 37 million shares. So let's do some of the math, because I always tell you, if it's looking like a duck, it's quacking like a duck, it's probably a naked short. So y'all ready for this? And again, for those who in the back, we know that if you got 549 million shares, you take away 25 million that we didn't get. This leaves us with a total of outstanding shares of 524 million shares. How many did we just figure out that Vanguard has? According to CNBC or CNN, I'm sorry, they got 36 million. Okay, boom. Let's do this. Let's multiply this by the 80% that the apes have. The retail investors, family. The retail investors. Boom. So 524 million, and we know that we have 80% of that on a minimum, probably way more. So what do we get? The apes got 419 million shares, baby. 419 million shares. So we know the retail investors have 419 million shares. How many does Vanguard have? How many does Vanguard have? Vanguard has 36 million, basically 37 million, but let's be conservative. Let's say they have 36 million plus 36. Boom. They got 36 million. And notice that this is shares bought or shares sold. And what is it? Plus 29 million? This means this is a long position, family. This is a long position, meaning they are holding these shares. Look, shares owned. They own these shares. These are not shorts. These are shares that they own. Okay, boom. So we already at 455. This is us and Vanguard. Us and Vanguard. Okay, let's look at BlackRock. BlackRock has 24 million, right? They have a 5.45% stake in the company. Plus, what was that number again? It was 24 million. 24 million. 24 million. Plus 24. Boom. We at 579. We're at 579, baby. We're at 579. Okay, and let's do one more. Let's do Invesco. Invesco has, oh, you know what? We could do a few more. Look, we got this one. They have 6.6, 6.5, and 6.2, right? These three right here, all together. Let's be conservative, and let's only use the 6 in the front, right? And why is that 3 6s? Because it's a curse. For who? The hedge funds. So we got 6.6, 6.5, and 6.2 for these three. Now, we're going to say that that's 18 plus 18. So we got the apes, and then we got the top few investors. Pardon me. We got the top few investors. We got the top few investors for, somebody said it's 64675. Maybe I'm going back and forth too quick. Let me go back and try again. So we got 419. Let's start it over for the apes. If y'all rocking with me, you already know. And then we got 36. Right? This is who? This is Vanguard. And then we have BlackRock. They got 24. Make sure you're paying attention. Our units are in millions. Right? Our units are in millions. Make sure you're paying attention to this. Our units are in millions. So we got the apes, we got Vanguard, we got BlackRock. Boom. Let's do this one. We just did BlackRock. Now we got Invesco. We need SSGA funds, and we need Geode. All three of these, let's add them up. Let's add them up, and let's just count them as 18. Plus 18. Boom. And we're at 497 already. Already. Look at that. Look at that. 497 already. And we didn't even add in some of these other ones. We stopped here. We can add in 3, right? Charles Schwab got 3 million. Northern Trust has 3 million. And then I can't even pronounce this one. I'm not even going to try it. But they got 3 million. So we can add in another 6, family. We can add in another 6. And let's, you know what? Since we added, we almost done. Well, let's keep going. You got BlackRock is back in there again. They loaded up a whole nother million. Look at that, 1 million. And then BlackRock Advisors, again, this is basically this right here and here. This is another 2 million. So all of the top 10 owners, let's add in another 2 million, family. Let's add in another 2 million. We're at 505 million. 505 million shares. 505 million shares, family. Now, let's make some sense of this. I just told you and just literally showed you that how many shares of AMC totally exist. If you take this 549 and you subtract 25 million that they were going to add in, what does this leave us with, family? We would have had 524. But we just saw that basically in a long position, there are 505 million shares being held long. 505 million shares being held long. That's important. That's important. If we add up the top 10 owners, family, the top 10 owners of AMC and us, the apes, we got 505 million shares. It's looking like a duck. It's looking like a duck. So let's go to Ortex and see what they told us last. What did they tell us last? They told us that they had 18.98% of free float was basically being shorted. But let's go with a lower estimate. Let's go with a lower estimate because they gave us an actual number on Twitter the other day. They said that there's 92 when it was 18.6. Notice that it's higher than that now. But they said, somebody said you put a 6 when it should have been not a 9. I put a 6, not a 9. Where? Should I take away, have to add another 3? I got to add another 3? Let's do it. Let's do it. Plus 3. Plus 3. Boom. We're at 508. We're at 508. All right. We at 508. I added 3 like y'all just said in the comments. Let's get it. Let's get it. Let's get it. And then let's do it. So now that we got all of this, right? We got all of this. I got all of the right buttons in now. So we see, even if the whole point of this was getting over the 500, the whole point of this was getting over the 500, right? So if you off by 1 or 2, it doesn't even matter because watch this. What did Ortex tell us? That we had 92 million short interest. 92 million, right? 92 million. Let's go. Plus 92. 600 million. This is a lot of shares. I want you to just know there are a lot of shares being sold that are not owned. That are not owned. That are not owned. Now, not every one of these shares, is a short, as a naked short. Not every single one of them. Not every single one of them. But you got to see that there's more shares that are being traded so many different times that you end up with these naked shorts. I'm telling you, family, it's crazy. It's crazy. How do we get to 600 million shares being sold around and traded around? It's crazy. It's crazy. It's just nasty when you see how many. Oh man, let's get it. Let's go see what AMC is doing real quick. Let's just double check. Oh look, it got a giant green candle, baby. Let's get it. Let's get it. Let's get it. However, remember, this is just the market opening time, and we have our resistance line right here, this orange one, which is at 45, almost 46, almost 46. But we broke past it on this candle, but it since came all the way back down here, baby. Came back down here. So somebody said, is that 80% including institutions or just apes? You know what? Our boy Adam Aaron, he actually explained that not too long ago. Watch this. Let's clear that up. Let's clear that up because I got a screenshot that'll clear that right up for you, baby. I got a screenshot that'll clear that right up for you. Watch this. And what was the question? My guy said this. He said, let's see if I can find it. He said, is that 80% just apes or institutions and apes? Take a look at what Adam Aaron said it was. This is Adam Aaron. He's the CEO of AMC. He's the CEO of AMC. And he said this. There's no mystery in yesterday's shareholder count. So he's referring to the shareholder count. For continued transparency, as of June 2nd, about 4.1 million investors held 501 million shares, right? This is June 2nd. They've since added shares. But watch this. Individuals have more than 80% of the shares, but notice how he distinguishes between individuals and institutions. But the count included everyone, both individuals and institutions. So this 4.1 million investors held 501, all of the shares, that included everyone. However, he distinguishes that individuals hold 80%, but the entire count, this 501 that he was talking about, it was individuals and institutions. Individuals and institutions, family. I'm telling you, we own the free float. We own the free float. That's really what it is. That's really what it is. Somebody said, it's live over here. Let's get it. Let's get it, baby. Let's get it. Let's get it and let's go. Now, let's take a look again. So we got a little green, or we got a little red candle. We had a green one, and we're on a 5-minute chart. Let's look at the 1-minute chart and get a more granular experience with what's going on. So again, all right, so we hit all the way up here to this 56.55. This is the high during the market open. This is the high during the market open. Now, for those of you who don't know, what we're looking at right here, these are called candles. They're green and they're red. Now, the candles tell you 4 pieces of information. The very top of these little strings, they're called wicks. And there's one on the top and one on the bottom. In this 5-minute time frame, that's how high it went and that's how low it went. And then when you see the top of a rectangle, this is telling you basically if it opened down here and closed up here, this is going to be a green candle. And it's the same as opposite for the exact, if you flip it. If it closed basically down here, but it opened up here, you're going to get a red candle. So this is why we have some downward pressure. Don't get caught up on this though, family. This is just the 1-minute chart. This is the 1-minute chart. We saw a lot of strength out the gate. A lot of strength out the gate. Brought us from 43 all the way up to 46, almost 47. Let's talk about it, baby. Let's talk about it. Let's talk about it. Somebody said, I'm listening at work. Shout out to you, big dog. If you just rolling in, let us know where you from. Shout out to Jake from Paris. I see you, big dog. Let's get it. Let's get it. All right. Now, somebody said, take a look at Nio. Shout out to Nio. Nio is up on the day, basically 0.5%. It looked bad, but it's up 0.5%. It opened over here, but it's basically right here. Up 0.5% on the day. Shout out to Nio. Shout out to Nio, baby. And also, yeah, let's look at Disney. I just told you about Disney in yesterday's video. And I was telling you the other day that we had Disney basically traveling through a channel between 79, right? And I told you just in yesterday's video, if you see it up there, let it cool off. Let it come down. Let it come down. Shout out to Milwaukee. I see you, baby. I see you. I see you in the building. Milwaukee is in the building. I showed you this just yesterday in the video. Shout out to the Discord family. If you're trying to get into the Discord, again, I'll get you in right when I get off of this live. Unless you get yourself in, because you can't totally get yourself in, baby. Let's get it. Let's get it. Somebody said shout out to Connecticut. I see you, baby. Shout out to Connor in Toronto. I see you, big dog. I see you. I see you. Shout out to Jones in Africa. I see you, baby. Let's get it. All right, take a look at this. I just showed you this Robinhood little chart yesterday. And it's this. So, Disney, like I told you in yesterday's video, it came up to 78, and look, even today it went up to 79. However, we don't want to load up there. You want to let it come down because in the last month it's been swinging between 78 and 170. You might not catch it at 170, but you want to be able to let it come down a little bit so you can load up. However, even if you load up in these high 178 range, this is Disney. Disney is going to take care of you. Disney is a banger. Disney is a banger. Okay, now let's go back to AMC, see how we doing on the minute chart. We're still coming down on the minute chart, baby. So let's move our channels here and here and see if we have some respect for them. So we're trading in between this range. We'll just leave that for now, and then we'll go into some more technical analysis as time goes on. Shout out to Columbus, Georgia. DC is in the house. I see you, baby. Shout out to you. Somebody said, shout out to me for consistency. I got you, baby. You know I just don't have it on my heart to leave you uninformed, baby. That's what I'm talking about. That's what I'm talking about. But again, do you guys see how many shares of this company is being traded? And one thing, people been asking me, how do you know when the short squeeze is over? How do you know when the short squeeze is over? Let's go. It's actually quite simple. It's actually extremely simple. Like I was showing you before with Ortex, right? How they were telling you that there's an estimated 9.6. There's more than that now because this is a post from them July 6, 6 days ago, right? Look at this. The short interest at 92.9 million, right? Short interest at this is telling you that there's still a lot of shorts. But what's going to happen? Shout out to Lebanon in the building. I see you, West Palm Beach. Leah, I see you, baby. So take a look at this, family. So basically, when this number goes down lower and lower and lower and lower, the lower it gets, then basically it's showing you that the short squeeze would basically be over if you've seen this number extremely low. However, you want to see the official numbers. Remember, Ortex, they show you estimates usually, but then they come out with the official numbers. They show you estimates and then they show you the official numbers over time. For example, when they tell it themselves, this is not a shot at Ortex. Take a look at this. The estimated short interest is 18.98 as of July 9th. The estimated, but then they come out with the official data. Let's get it. T-Bone in the building. I see you, big dog. Let's get it. Philly, I see you, baby. I see you. But again, how do you know the short squeeze is over? You're going to see it. This go drastically down. This is why the large institutions, not too long ago, and let's see if we can look through Ortex's data. Let's see if we can look through it No, I'm not signed in. Let's see if we could look into it and scroll down, because they told us a while ago that the short interest was like 12%, family, like 12%. And then what was that? This was basically the large hedge funds and everybody else trying to trick you out of your shares. I'm telling you that. They're trying to trick you out of your shares. But we got to just keep paying attention. We got to keep paying attention. And shout out to you for the super chat, Big Dog. Let me read it before it disappears. It says this, and this is the dude. Much love, Big Dog. He said, love the energy and keep provide the info you keep providing. Much love. Let's get it. Let's get it. AMC. Said he got 145 strong, baby. 145 strong. Let's get it and let's go. Here we go. Take a look at this. This was June 17th when they said the estimated short interest was basically 13.56. And this is not a knock on Ortex. This is what the short sellers in the background are trying to manipulate and work through the market. They try to manipulate and work through the market and basically just get you to think that the short interest is down, because that kind of shows you that the short squeeze is basically ending when the short interest is really, really, really low. Keep in mind, over 10 is extremely high, and we're all the way up at basically 18.19 or 18.98, somewhere around that range. So the short interest is double what is considered extremely high. Double that. It's double that. And much love, much respect. Toronto in the house. I see you, Brandon. Let's get it, baby. Let's get it. And family, I know you saw this. I know you saw this. When I saw this myself, I was thinking to myself, wow, I always knew they were watching all of us. I always knew they were. Those who've been rocking with me, you've seen this. But this had to be a little surprising to see it from Bloomberg, an official source from Bloomberg. Now, let me go pull this up for you. To see it from an official source like Bloomberg. This was crazy to see that they are literally scouring the internet. Plotkin told his team of data scientists, remember this name if you're just getting in here, Plotkin told his team of data scientists to scour media and message boards to look for shares that retail investors are rallying around. They got their eyes on you, baby. They got their eyes on you. They are watching you. They are paying people. Shout out to my guy, Randy. I see you, big dog. Shout out to Virginia. I see you, too. Let's get it. But I want you to see this. Somebody said 92 doesn't include fill in the blank because, right. Again, it's an estimate. But again, I know you guys see this. Plotkin is watching you. He's literally paying data scientists. He's not paying Joe Blow down the street. He's not paying just anybody. He's paying data scientists, right? People who went to school to study data and computer science. And he's paying them to basically watch what you were doing. Listen, I know the world went crazy. When a dude, what was his name? Roaring Kitty, right? Roaring Kitty, shout out to Roaring Kitty. Keith Gill apparently is his name, according to public information on the internet. Imagine you went to Harvard Business School and you were there for like get your PhD and all of this business stuff, and then you lose all of your money to some dude on Reddit named Roaring Kitty. Tight. Mad. You're so mad. Shout out to Roaring Kitty. Major salute. for showing them what time it was. Who is this? For those of you who don't know, he was one of the main people who was buying GameStop when it ran up, but he was buying it for like 2 years before it even ran up. And so shout out to the big dog. Shout out to him. Imagine you went to Harvard Business School. You did all of that. And then next thing you know, you lose billions of dollars to some dude named Roaring Kitty on Reddit. Let's go. I'm telling you, they're so mad. But it is what it is. They got to stop betting against the apes. They got to stop betting against us. Jason, right, tight. He's tight. So tight. Let's get it. Shout out to Eugene. He said, Japan is in a building. Let's get it. Japan is in a building. He said it's 10:50 in Japan. That's crazy. Much love. Major salute for the super chat, big dog. He said, bop, bop, bop. Let's go. Appreciate you, big dog. Appreciate you. Much love. Somebody said, Roaring Kitty sound like a Street Fight character. Yo, I'm telling you. Listen, imagine that. Imagine you literally went to Harvard, you got a business degree, you was there for years, you paid all this money, right? And then the next thing you know, you at the top of a hedge fund, and then boom, some dude on Reddit named Warren Kitty. You don't even know, like, just made you lose billions of dollars, if not tens of billions of dollars. New Jersey is in a building. Let's get it. Let's get it. All right, now, let's get it, baby. And let's take a look again at what AMC is doing. So, AMC, right now, currently, we are finding some support. Where? At 43. We're finding some support at 43, but we already knew that. We already knew that with this yellow line right here. But notice, this is the minute chart. This is the minute chart, baby. Somebody said they just bought 50 more. Let's get it. Apes together strong, baby. Apes together strong in the building. Let's get it. Discord family in the building. I see you. I see you. Somebody said Japan is always in the future. That's crazy that it's 10:50 in Japan. That's really crazy. That's really crazy. Family, let me know what time it is where you are right now. What time is it where you are right now? I'm on the East Coast of the United States. It's 9:52. My guy just sent me a super chat, and appreciate you, big dog. He said it's 10:52 where he is right now in Japan on the other side of the world. That's crazy. That's crazy. If somebody said the whole stock market is down, let me know what time it is where you are from. What time is it right now? It's 9:52 where I am. I'm on the East Coast. Let's see. Somebody said the whole stock market is down. Let's take a look. VTI, Vanguard's Total Stock Market Index Fund, is basically, it's red, but it's basically flat. But if this is red, this means that the growth plays are going to be down more than you would like. More than you would like. Somebody said it's 9:52 where they at, 8:52. Somebody said it's 6:52 in LA. Oh, you up in the pre-market. You was up early, baby. You was up early, baby. Somebody said it's 6:52 again in Las Vegas. 6:52 in Las Vegas. Somebody said it's 3:52 p.m. in Italy. It's 1:52 in the Congo. Is that what you said? I lost it. It went too fast. Somebody said it's 6:52 a.m. Tampa, Florida, 9:53. Yeah, we in the same time zone, baby. Arizona, 6:52. It's 3:53 where they at. Atlanta, 9:52. Yeah, same time zone. And Hawaii, it's 3:53 a.m. Man, let's get it. Yo, family all over the world, baby. Family, yo, listen, again, I see people saying they're trying to get into the Discord. If you're trying to get in, I got you when I get off alive. But you could get yourself in. But after that, I'll help you get in. But they said it's 6 p.m. where they at almost. Pennsylvania, 9:52. Someone just said Texas is 8:53. I never considered that Texas was in a different time zone, but that's interesting. Never thought about it. Let's get it, baby. Let's get it. Somebody said, okay, I see you. I see you. It's, wow, that's crazy. That's crazy. North Korea, come on now. Come on now. Somebody said it's 7:53 in New Mexico. Lebanon, okay. Somebody said it's timeless on the moon. That's an interesting point. I wonder how they do calculate that. It's probably different. Oh, somebody said Nio is on a rocket. Let's see it. Okay, we got some green on Nio, baby. Somebody said it's 2:45 where they are. In Lebanon, it's 4:53. Philly is in the building. Let's get it, baby. UK is 3 p.m. UK is 3 p.m. Where I am, family, is 9:54. And Ghana is 1:54. Y'all got to put some PMs on this. I don't know what you're talking about, baby. PM, AM, what you talking about? Is it 8:54 in AM or PM? Let's get it. Discord family in the building. Braden, let's get it, baby. Let's get it. Somebody said, let's go, Nio. Yeah, we getting it. We getting it right now. So Nio currently, the floor or the bottom of support is $45 a share. $45 a share. Memphis in the building. I see you, baby. I see you. I see you. Let's get it. Let's get it. And let's look. AMC. Currently, AMC is down 4%. But remember, this is nothing. This is nothing. When you zoom out, let's go to the day chart. Look at that. Bow. Still way up. Way up. Way up. And again, shout out to the Discord family. I see you, baby. I see you. Germany, I see you. 15:55. Let's go. Let's go. So what's that? 3:55. Let's get it. Somebody said it's 5 p.m. in Romania. That's a new one. That's a new one. Shout out to Romania. Shout out to Romania. Syracuse in the building, 9:55. Okay. West Coast in the building. Japan, I see you, baby. Let's get it. Let's get it. All right. So let's take a look at some of these charts. Again, if you don't have VTI, if you do not have VTI, on your watch list. You need it on your watch list so you can keep track of the entire stock market. Notice, family, the entire stock market is down just 0.08%. So it's basically flat. So it's showing some strength. The stock market in the open is showing some strength right now. It's showing some strength, baby. Sweden is 5:56 a.m. Shout out to Sweden. Somebody said it's 12 in Ethiopia. It's 3 a.m. in Australia. Shout out to y'all. Shout out to y'all. Somebody say he just put 10,000 on Nio, baby. Let's get it. Let's go, Nio. Let's go. CCIV is waking up today. CCIV is waking up today. However, there's some talks, family, about CCIV getting ready to dilute the shares. There's a lot of talk around it. So you might be able to find a huge buying opportunity on this. I want you to be on the lookout if you've been looking to pick up some CCIV. Don't just dump all of your money in it at once. Make sure if you're looking to load up on this, you rather get it at a really good price. Because let me tell you something, family. This is not a good look. This is not a good look if you get in high. If you get in high and then you hear something like this, where is it? This. CCIV's recent SEC filing is setting grounds for an important shareholder vote. Dilution is becoming a prominent concern from this filing. One proposal would expand the company's authorized number of shares from 500 million to a whopping 15 billion. 15 billion. That's crazy, family. That's absolutely crazy. That's crazy. That's crazy. Somebody said, Keenan, do you smoke? I actually don't. I don't got anything against it, but I actually just don't. I actually don't. Somebody said they halted something. OKC in a building. OKC in a building, baby. I see you. I see you. All right, so let's look at CCIV. Let's take a look. If you were trying to load up on CCIV, currently a really strong support level for CCIV. So far, we got two confirmations over here and right here. It's 25. Basically, you can think of this as 25 flat. You can think of it like that, 25 flat. You can get it around there. That's a decent first strike. Decent. What do I mean by first strike? I mean, you're going to break your buys up. Bow, bow, bow. Decent first strike. Baby, that's what I'm talking about. Dorian, much respect. Much love. Appreciate you for that. So that's a decent first strike. You could technically use right now as your first strike because it's in the $25 range. But as soon as they announce that they're going to split, or not even split, dilute the shares by basically 14 billion more shares than they thought, then, man, this is not a good catalyst. So you could catch it actually way lower. So then, if you really want to catch it low, take a look at this. This $23 range is a stronger buy. So this is decent for a second strike. You couldn't wait and let this be your first strike, but this is decent. Florida in the building. I see you, baby. I see you. But let's go back to the 30-minute chart. If you see CCIV drop to the teens, anywhere in the teens, and this is not financial advice, but anywhere in the teens is basically straight and decent. It's straight and decent. Somebody said, right, that's right. My guy, King Moneymaker, he said, Keenan, he basically on this. Yo, you on point, baby. You on point with that. Just know. Oh, wow. You know what happened last time, family? AMC is down because we don't have any tears in the chat. We don't have any tears in the chat. We need some tears in the chat to get us some AMC runs, baby. Tears in the chat. Let me get over to the chat. Right now. We need some tears in the chat. I'm coming over there, baby. I'm coming over there to the chat. We need some tears in the chat. Why? Because AMC stock runs on hedge fund tears. We need some tears in the chat, baby. We need some tears in the chat. Let's get it. Let's get it. Boston is in the building. I see you, baby. Boston is in the building. All right. Tears in the chat. I see it. Come on. Tears in the chat. Let's go. Let's go. Oh, we need more power. Let's get it. Let's check the 5 minute. Okay, we fighting it. We're battling it. But we're moving this red one up. We're moving it up. We're moving it up. We're moving it up. We need this to work. We need this to work, and it can, family. We got this. We got this. Apes together strong. Apes together strong. Let's get it. Oh, we making it. Let's go. Let's go. Look at the 1 minute chart. Let's go. Let's go. Come on. We need power, baby. We need the power, baby. That's it. That's what I'm talking about. That's what I'm talking about. That's a great question. Somebody said it's working. Let's get it. Let's get it. This is science. This is science. This is science. We don't need to go to Harvard Business in order to find out that basically, listen, let's go. Oh. We got to keep battling, baby. We got to keep battling. We don't need to go to Harvard Business School to see that tears in the chat is what brings the stock up. It's science. It's science. It's that simple. It's science. It's science. Let's get it. Come on, let's battle, baby. Let's battle. Look, this red, this is nothing. This is nothing. This is nothing. Oh, it's working again. It's working. It's working. Look, we got two. We almost 2 for 2. We almost 2 for 2. We're almost 2 for 2. Let's go. Let's go. Tears in the chat. Hedge fund tears. It's rocket fuel, baby. What them up? Bow. Let's get it. Let's go. Somebody asked a great question. I just seen it in the chat. Somebody said this. Somebody said, how do you roll an option? Okay, so let's take it back. And let's go to, shout out to Roaring Kitty again, X out of them though. Let's go to the options calculator. Family, whenever you buy an option, what I want you to do is use the options profit calculator. Use the options profit calculator to get an idea of your time frame, baby. Get an idea of your time frame. So what are we looking to do? In this hypothetical example, we're looking to buy a call. So this is the options. You don't even gotta look up anything crazy. Just look up options calculator. Google it. Options calculator is the first thing that pops up. Options calculator. And then basic, right? You see this screen? You're literally gonna click on the first thing you can click on, which is long call. This is a call option. All right. So then you're going to see this. You just fill in the blanks. It says the underlying stock. What is the ticker symbol? In this case, we're looking at AMC. If you click get price, it'll give you a price. Boom. Keep going down. What option do you want? Do you want to buy an option? Yes, we're trying to buy a call. Okay. Now you select the option. So you click this select option right here, and it's going to open up all of the options that exist. So now, look at these. You click on the date. You pick any date. How did I get to this screen? I clicked this, select option. Again, I'm trying to give you the tools because what I want you to be able to do is be able to fish. I want you to be able to fish, and I want you to have a good time learning over here. So let's take a look. Any date, July 6th, July 23rd, July 30th, August 6th, August 13th, August 20th. August 27th, every single date, all the way out to January 2023, family. January 20th, 2023. But let's say, hypothetically speaking, that you wanted to buy a call option basically for Friday. I wouldn't, but let's say that you wanted to buy one for Friday. Take a look at this. Now you look at all of the strikes. All of the strikes. You're going to buy a contract that says you can buy 100 shares of this stock at one of these prices. That's the strike price. Let's say that you thought AMC was going to go somewhere around $48 by Friday. Somewhere around $48 by Friday. So then you pick the 48, hypothetically, right? You pick the 48 strike. What is the date? June 16th. I'm not saying do this because I'm not buying this one. I'm just showing you an example. So let's say you were to think that it's going to 48 basically by Friday. So then you pick this one. How much do you have to pay? Usually, if you want to get it right now, you have to pay the ask price. There's a bid price. This is how much people are basically trying to sell it for. And then there's an ask or trying to buy it for. And then the ask price is what people are trying to sell it for. So if you want to buy it literally right now, you pick up it on the ask price. Currently, it's $193 per contract or per option. So take a look at this. Then it loads up. I click that one, 193. But notice, one contract times 100, it gives you 193. That's the price. And I'm not buying this one. I'm going to say that again. I'm not buying this one. I'm showing you an example. And then it says, what is the range that you want to see your chart go up to? What if AMC could possibly go to 70? Who knows? In this short time frame. Then I click that. That's the high that I want to see. Then you get a chart. You get a chart. I'm going to try to make it expand so you can see it. So right now, every single one of these numbers, and let's take a look at what option we hypothetically picked. We picked this. We bought it for $193, right? And take a look. We picked, what was it, the 48? Yeah, we picked the 48 July 16th call option for $193. We're looking at the options calculator for those of you who just got in. Every single one of these numbers isn't a dollar amount. It's a percentage. Every single one of these green numbers or red numbers in this rectangle, this is a percent that it'll go up on a specific day, on a specific time. So for example, if you were to buy this stock right now and it was to go to 70, basically by the 12th, aka today, you'd be up 1,000%. This is the 10x. 1,000% if it went to 70 today and you bought this option. This is why people sometimes buy short-term options, because it's high risk, high reward. But look at that. If you put up $200 just about and it went to 70 today, you would be up basically to $2,000, family. But again, you have the most likely you would lose every single dollar that you had. Most likely you would lose every single dollar. Coco Miami, I got you, baby. I got you. I'm gonna break it down for you. I got you. But you will lose every single dollar that you have, even if it stayed at 44 or 45 or even 49 by expiration. But notice this, from left all the way to right. Let's say that it went up to 50, right? Notice that even if it stayed at 50, it's 144%, 121%, 94%, 62%, 16%, 3%. Literally the same price on different days. As time goes on, you lose more and more value on your option due to what is called theta, aka time decay, family, aka time decay. So even if you're like, whoa, I bought a call option for $48 and then it went to $50, how did I lose all my money? You lost all your money because you held it to the expiration. So generally, you can do what you want. I do not hold call options to the expiration. Never. Never will you probably catch me. If I do, I'll probably tell you. But I want you to know this. You will not catch me 9 times out of 10, 99 times out of 100. I'm not holding it until expiration. Why? Because it's losing value for nothing. There's nothing. You're just losing value. I would hold closer to expiration if there was some catalyst. Like, for example, let's say we expect the AMC, something crazy to happen on the last day. Then maybe then. Other than that, I'm not holding the expiration. I'm not. Because you'll lose all of your gains. Even if it went to 60, you bought the 48. Let's look at the call option again. Let's look at it again. This is the 48. This is the July 16th, $48 call. This call option gives you the right, but not the obligation. What do I mean by that? You have the option to buy 100 AMC stocks for $48 if you choose. And you have until July 16th to do it. Now, this is the contract. The contract has value. The stock has value as well. So then, with that in mind, you can sell the contract or you could buy the stock. I wouldn't buy the stock. I wouldn't, and that's called exercising. When you use your contract, it's called exercising the contract. And you would use your option to pick up 100 shares of AMC for $48. What I would do personally is I would sell the contract and then just take money from it instead of having the stock. And then possibly use that to buy AMC stock. Okay, so now take a look at this. Even if you bought that $48 option and it went all the way up, let's say to 65, look, you're going to lose value slower since it's this high up. But notice that it gradually goes down just a little bit the higher that it's up. But it goes down. Time takes away from it. At 57, look at that. Lose value, lose value, lose value. What is losing your value? It's this thing here. This, theta. It's theta. If ever you want to see how many dollars your option is going to lose every single day, if the stock remains flat, look at theta. Look at theta and then multiply it basically by 100. And this is the dollar amount that you're going to lose basically every single day on this. So for example, this theta right here is 0.05. This is telling you that you're going to lose $5 a day. $5 a day on this option. $5 a day on this option. That's how that's rocking out. So somebody said, how do you roll an option? So generally, if you can't just press a button and roll, what you got to do is this. What you got to do is just, hypothetically, right? I'm not going to tell you what to do. You do what you want. But what you do is, yes, you can sell it at any time. You can sell an option at any time. So what you do with that is this. If you want to roll your option, what that means is, let's say that you bought an option for $100 flat, right? Let's keep it simple. Let's say you bought an option for $100 just flat. And then next thing you know, it's running out of time. But you lost like $20 on it. Let's say that you lost $20. Say you lost $50 on it. You bought it for $100. You lost $50 on it. Now you got $50, and the expiration date is basically coming up. So what you do in this hypothetical situation is you roll it, aka you use the $50 that you have left to get into a better option. This is called rolling it. You get into a better option with that $50 that can make you your $100 back, and then boom, take you to the promised land. That's what I'm talking about. That's how we getting down. That's how we getting down. Somebody said, what option is the Discord getting into soon? I'm looking at Apple. I'm looking at Apple. And again, if you're trying to get into the Discord, I'll let you in, but you could probably get yourself in, baby. You could probably get yourself in. But again, what option am I looking at? I'm looking at Apple personally for next option. For next option. I want you to think though, there's a lot of, how can I put this? There's a lot of sentiment being lost on a lot of the stocks because people always expect for the stock market to just go up, just way up, right? And they never expect it to go red. They never expect it to go red, and then they think everything, why did I invest when it's red? When all you really have to do is just zoom out. Like, I know it sounds cliche, but you just literally got to zoom out. Whenever you see like so many different red candles, like what if I showed you this chart? This is Apple, and you saw this. You're like, oh my God, look at all this red. Look at all this red. Literally zoom out and look at the chart going up. Look at it going up. Look at that. Even if you bought Apple right here at 58, and then it dropped all the way to 35, you would have thought, oh my goodness, why did I do that? Why did I buy that? What was the point of that? And then you sell low, right? And be right back here crying to me. You know how I go. But what you should have did was grew up a little bit and then just held on. Because we wish we could buy Apple for $58 right now. Even though it dropped to 35, we wish we could buy it at 35. We wish we could buy it at 35. We wish we could buy it at 38. Because look at it now. Look at it now. It's all the way up to 140. If you would have bought Apple right here, like during the pandemic, just around that time, right? When it was, let's see what price this is. Let's zoom in on that. Yeah, right over here, $80, $80. And then it dropped all the way to $50. It almost lost half of its value. This is Apple, family. This is Apple. You bought it at 80 and it dropped to 50. Guess what? You would have been right there crying in the corner. But then, guess what? We wish today that we could buy Apple for $80. What do I mean by this? I want you to take a look at this. Now that Apple is all the way up here in green, look at all this green. Now that Apple is all the way up here in green and it's 146, what could totally happen? Now, I'm not saying this is Apple. Apple's a banger. The iPhone 13 is coming out. The new AirPods is coming out. The new Macs are coming out. Everything's coming out. What I want you to think of is this. If Apple was to drop right now, you would pick it up right here at 146, and it was to drop all the way down to 100, literally all the way down to 100, that would look crazy on the chart. That would look crazy on the chart. However, what I want you to think is, in the future, this is going to be up even more than that. Even more than that. Somebody said, did Apple have a stock split? Yes. Apple does stock splits all the time. All of the time. Because if so, nobody would be able to afford Apple stock if they didn't. It would look like Apple stock would look like what is it? Berkshire Hathaway. Have you ever seen that stock? Let's take a look. Let's take a look at that. How do you spell Berkshire Hathaway? Here we go. Take a look at this. Imagine buying one of these. It's $423,205 right now for one share. For one share. Why is it so much? This is where a lot of billionaires have their money. So this share price means nothing to them. Their share price means nothing to them. They don't want to have 100 million little shares. They rather have less than that so they can keep it up. So, but again, Apple would look like Berkshire Hathaway if they didn't split so many times. Take a look. They did a split August 20th, August 31st, 2020. They did a split, in June 9th, 2014, February 18th, 2005. They do splits all the time. All the time. All of the time. Let's go, Jay. Let's get it, baby. Let's get it. Nexus, much love, much respect for the super chat. Said regarding AMC, said I'm new to the exchange, but it sounds like the hedgies are diamond-handed options with losing plays. So what they're doing is this. There's two ways that these hedge funds are losing money. And I'm going to explain to you real quick. So those of you who don't understand, don't get it yet, and much love, much respect for the super chat. Again, family, let me tell you something. You don't have to send any super chats, but I know you do it out of love. If I see your comment, I try to get to it. I appreciate y'all. Just know I'm here to rock out, here to educate the people. Just know that. But I got you. Let's take a look at this. There's two ways that these hedge funds are losing money. And those who have been rocking with me, who have seen this post, because I just posted this just recently, let me tell you something. Melvin Capital lost 46% of their company. Not that one, this one. They lost 46% of their company worth. That's absolutely crazy. This is absolutely crazy. And let me go to my Webull background I like, and then this. Webull background. Here we go. And you know what? Let's put a face. Let's put a face to it. 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 Take a look at this guy, Plotkin right here. He's basically running the show. This guy's running the show. Why does he look stressed? Why does he look stressed? Could he get some tears in the chat? Could Plotkin get some tears in the chat? My guy right here needs some tears in the chat. And take a look, family. Somebody said it's always 14 haters that thumbs down a video. Let me tell you something. While we getting rich, I hope they find peace. I hope they find peace. The love always outweighs the hate. Always, always. So let's see, family. Take a look at this. Plotkin right here. They basically lost 46% of a company. Imagine that you lost 46% on an option. You would be hurt, right? You would be hurt. However, imagine that you lost 46% of a hedge fund. This is not just 46% of your money. This is everybody's money. This is everybody's money. You're basically losing 46% of other people's money. But the good thing about the stock market is a lot of the time, you know what I'm saying? It's a chance to make it back, and that's what they're hoping for. That's what they're hoping for. Get my guy Plotkin some tears in the chat. He needs some tears in the chat. Let's go. Let's go. Somebody said, that's a great question. Ryan Harris, he said this. He said, do you regret not taking profits on your Nio calls once it reaches 100%? So we still got so much time on them that no. And again, I want to also show you something like this. I want to also show you something. So let's go look. I'm going to bring up these Nio call options that I have right here. I'm going to screenshot. I got the screenshot. Shout out to the Discord family in the building, baby. Now take a look at this. Regret is for those who are unprepared. Sometimes regret can happen in other ways, but a lot of the time it's due to being ill prepared. So take a look at this. These Nio call options that I showed you 100 times, right now it's looking like this. We up $7,000 on Nio, right? Shout out to the Discord family. On the stock alone, we're up 27%. On the Nio $30 call, this is up 100%, even after Nio pulled all the way back from $55 all the way down to where it is right now to about $45. Still up a home run. We got the Nio $100 call. I still have the $85 call too. But look at this. 14%, $100 call. And look at the September 17th one. Down 20%, which is nothing for an option. Why do I not regret not taking profit on this one? You could. It's always up to you. You could take profit. I tell you every time. Take profit at any moment. But you could. Why? Take a look at this. Look at our time frames. It's summer. It's July. This is September. This is getting close to Halloween. This is the $50 one, and this is the one of the most recent. And then this one, October. We still have until October for this one. And look at this one. January 2023. Look at this one. Look, it's you know what I'm saying? It's time. You give yourself the time. And there are going to be ups and downs, but there are more ups than downs. And this is how you win. This is how you win. This is when you look at a chart. This is when you look at a chart and you say this. You say this. Man, like, for example, we just looked here. You buy a call option at 81. We're looking at Apple again. This is hypothetical. You buy a call option at 81. And then you say, whoa, this thing dropped to 53. And what do? You sell? No. You just hold. But you had to have planned to give yourself the time you needed so it can come back. And then you can sell somewhere higher, somewhere way higher. It's all about time. Like he said, proper preparation prevents poor performance. Say it with me again. Proper preparation prevents poor performance. That's what I'm talking about, baby. That's what I'm talking about. Somebody said it's looking like more downs than ups. Yeah, if you zoom in, it's more downs than ups. But to be honest with you, it's not even easy to find many stocks, and the large majority of the stocks are down. No, that's usually not the case. You could literally click anything, right? Like let's go to Tesla. Somebody said it's looking like wrong one. TSLA. It's more downs than ups, right? Remember Tesla was $900, and you saying, oh wow, more downs than ups, more downs than ups. Okay, zoom out. More ups than downs. By far, it's not even close. By far, it's literally not even close at all. You look at Disney. Disney has been stagnant for a little bit. It even got to 200 at one point, but now it's been down, right? More downs than ups. Look at these downs. Oh yeah, that's if you zoom in. But if you zoom out, look, ups. Look at this. Everywhere in the past is lower than the present. Look at Nio. More downs than ups, right? More downs than ups. Yeah, if you zoom in, let's zoom out. Look at this. Everywhere in the past, generally, if you zoom out, is significantly lower. That's what it's all about. Even CCIV, even after they messed up, even after they got us to $75 and botched the landing, look at this. It's still up from $9 to $26 in less than a year. And let alone if CCIV comes out and they tell us, bow, you know what? Our car can get 500 miles like they said it can, and they're delivering them, then guess what? This is going to be a rocket. And Angel, much love, much respect, big dog. I appreciate you. So much respect, so much love, big dog. That's what's up. That's what I'm talking about. Somebody said, can you explain a put option? I got you. Y'all ready for this? And again, if you just getting in, because I see some people just rolled on in, you got to let us know where you from in the comments, baby. We know where you from. We trying to know where you going. So now let's talk about put options, because again, notice that the stock market is getting down. Like it's coming down a little bit. When you see the growth stocks, most of them are like hovering at -4, -2, something like that. And VTI, the total stock market, is kind of flat, right? This means that buying pressure and selling pressure are kind of close to each other, so it could go any way, right? So it's looking like it's starting to be time to load up, not go crazy, but load up on put options. So somebody said this: a put option is basically a bet that the stock is going to go down. Technically, kind of, but not totally. So put your listening hats on for this. Take that idiot hat off, throw it over there. You wait for the Motley Fool section for that. But for right now, I need you to put your listening hat on. Let's take a look at this. We were looking at the options chain, look at this, the basics. You can buy a long call, or you could buy a long put, right? You could do all of these things, or you could do the exact and total opposite. For example, a naked call or a naked put. This is basically selling things that you don't have, but it's not illegal. It's not like a naked share. So let's take a look at this. Imagine. So let's go over here. Let's look at what's something that everybody has. So let's look at everybody has a Lambo. Everybody that's invested into AMC, at least next year or 2 years from now, who knows when. But everybody got a Lambo, right? You got a Lamborghini. Let's see what a Lamborghini is selling for. Lamborghini price. Or actually, 2022. Let's see what the newest Lamborghini is looking like. If this isn't even out yet. So Lamborghini 2022, 769 horsepower. How much does it cost? Okay, so according to this quick Google search, family, it says that you can get a new Lamborghini 2022 with rear wheel drive for $327,000, right? So let's just call it $300,000. You could get a Lamborghini. You can get a Lamborghini. Let's say that you work at the Lamborghini dealership where there's not just one, there's many. Not just one, there's many. Like this, right? Let's say you work at the Lamborghini dealership. Boom. This is you. There's like 100 there, right? Now, this is how a call option works, baby. Take a listen to this. A call option gives you the option to buy. And let's say we buy any option to buy Lamborghinis. Take a look. So we know that this new Lamborghini 2022 basically costs $300,000. 327, we're gonna stick around, $300,000. You got the option to buy this Lamborghini for $300, $300,000 flat. We're gonna talk about call options. What if the value of Lamborghinis goes up because there are so many new AMC investors that want to buy a Lamborghini? All of a sudden, there are multi-millionaires who are ready to buy Lamborghinis. So now there's a limited supply of Lamborghinis, but there are so many new buyers. There are people saying, man, listen, I'm ready to buy it for $300,000. Somebody might be ready to buy it for $301,000. Now this starts to add up to the price. So now if you picked up an option today that said you could buy a Lamborghini for $300,000 and it costs $300,000, technically right now your option is worth nothing. But if everybody starts buying Lamborghinis and the price of Lamborghini goes up, and now the price of Lamborghini, let's say, was $400,000 for one. At this current point, you have an option saying that you could buy it for $300,000, even though the price is $400,000. You just won. You just won basically $100,000 because you picked up a contract saying that you could buy it at this price. Now, what if the total opposite happens? What if the total opposite happens? This is how you buy a put. A put is the option to sell. A call is the option to buy. A put is the option to sell. So now, if you bought a put, you bought the option to sell it. So let's say that you know that nobody is going to buy a Lamborghini in a little bit. Nobody's going to buy a Lamborghini in a little bit. So the price is coming down. They can't sell Lamborghinis for nothing. They just cannot sell them. Nobody wants to buy it. Nobody at all. So next thing you know, the price of the Lamborghini is $300,000. And you pick up a put option, the option to sell it at $300,000. And next thing you know, it costs $200,000. But guess what? You bought a put. So you have the option to sell it at the strike price. You have the option to sell it at the strike price. That's what I'm talking about, baby. That's what I'm talking about. So a put gives you the option to sell at a specified price. No matter what happens to the stock, you bought the option to sell it at a specific price. So if AMC, that's exactly what's going on with some of these short sellers, family. A lot of them, basically, they want to sell AMC. They want to sell AMC at $10, but guess what? It's at $70, so they in the hole. John, shout out to you. Much love, much respect. Appreciate you, big dog. He said, thank you for all the knowledge. He said, let's get it, reported earnings. Do you think it's a good gamble to hold through the earnings? So if you're in it long term, John, if you're in it long term, family, then guess what? You can hold through earnings if you win it long. But if you're trying to swing it, that's a super high risk. That's a crazy high risk. If you already up on the play by a lot and you don't want to take the risk, you know what to do. But if you holding it long term, then it's fine. And my guy, Celestial, much love for you, big dog. He said he went to Panda Express the other day and your fortune said, you hold the key to success. You hold the key to success. And he said he holding AMC, baby. Let's get it. Let's get it and let's go. Somebody said the volume on the mic is going up. Mic check, 1 2 1 2. Is the mic good? I think it's good, baby. Somebody said AMC is doing numbers. Let's see it. Oh yeah, we pulling up a little bit. We're pulling up a little bit. Oh, we're on a day chart. Let's go to the 5 minute. Oh, let's go. Okay, so as soon as we got in though, look at this. Bow. So it's staying within this channel. Look, it's respecting it like we were saying earlier. It's staying between 43 and 46. This is our current range on the day. But remember, this is consolidation between 43 and 46 on this 5 minute chart. Let's zoom out a little bit to the 30 minute. These are the 30-minute candles. Every single one of them is the 30-minute time frame. Now, notice this consolidation between here. This is losing a lot of people a lot of money on put options for sure. Call options, yes, but put options for sure. Because the two ways, and I tried to explain this earlier, but I got sidetracked. The two ways that options traders, particularly short sellers, are losing a lot of money is this. When you buy a short position, or actually you sell a short position and you borrow the stock to get the short position, you have to pay interest on that. So the short sellers are paying interest on the shares that they borrowed, right? Because it's all on loan. So they're paying interest on that. And then beyond that, they're down on the play itself because the option is basically, it's way, way, way out of the money. Way out of the money. It's way, way, way out of the money. Way out of the money. And again, let's take a look at CCIV. Yeah, CCIV is waking up today, family. Look at that. It's waking up. It's waking up. And like I was saying earlier, a good first strike, like it was earlier today, was 25. A good first strike was 25. But again, if it go up to 28, I would not buy it up there. I would not buy it up there. Now, let's go to Stonko Tracker and take a good look at AMC and see what's going on with none other than the Motley Fool. Now, we'll come to them later. But let's take a peek. Let's take a quick peek. Let's take a quick peek at the Motley Fool. He said, why the meme? Oh, this is Yahoo Finance? Why the meme stock trade isn't going anywhere? Oh, they getting in on it too? Yahoo Finance is getting in on the hate. AMC Theaters. Let's see. Where's the good old 8 lies that have fueled the AMC Entertainment pump and dump scheme? Oh, that's going to be a good one. That's going to be a good one. 8 lies that have fueled, and this is from the Motley Fool, that have fueled. I wonder what the 8 lies are. But let's look at Stonko Tracker before we get to that. The gray area, much love, much respect. If you only had $1,000, would you diversify? At that point, probably not. I might just put it all in either Apple if I want to play it safe and still grow. Apple, 500 in Apple, 500 in Microsoft. If you want to just set it and forget it. If not, if you could hold for like, let's call it 3, 4, 5 years, you really want to put this in and you don't need it for rent, then something like Nio, just let it go in there. This will double it quicker than Apple would in this case. Or if you want to play it super high risk because you could re-up on this 1,000, then you could go high, you go higher risk than that. Somebody said pump and dump scheme. That's funny. That's funny. That's funny. That's funny. Somebody said they should probably try DMing. If you try to get into the Discord family, just know, I'll get you in when I get off of live. Other than that, you could get yourself in, but I'll get you in if you get off when I get off live. I'll help you out. Oakland is in a building. Somebody said, could you buy options on Robinhood? Yes, you got to apply. You got to apply for it. All right, so let's take a look. Boom. So options currently right now. Since the 9th has passed, this is in the past. We're not looking at this anymore. We're looking at this. July 16th. Currently, the tides have changed again. Where, and I told you this was going to happen so many times, that the options are now in our favor. The call options, there are 76, excuse me, there are 76,000 of them that are expected to expire in the money. But with the puts, only 39,000 of them expected to expire in the money. Most of the puts are bets that the stock is going to go down. Most of the calls are bets that the stock is going to go up. And let's look. Today, on the shares available to borrow, the short sellers, they pushing the stock down because this sometimes is in the 2 millions, sometimes. But now it's in 800,000s. This means that they borrowed a lot of shares and they're ready to try to mix in those synthetic shares and then flood them into the market. Flood them into the market. Now, you ready for this, family? If you ready for the Motley Fool and you want to see what those 8 basically points are, let me see some idiot hats in the chat. 8 lies that have fueled AMC Entertainment pump and dump scheme. If you ready to see this, let me see some idiot hats in the chat. 8 lies that have fueled the AMC pump and dump scheme by none other than the Motley Fool, baby. None other than the Motley Fool. 8 lies. That's crazy. We got much love, much respect. Appreciate you for the super chat. Said I'm worried about the government saying you can't have money because they own money and they don't give a F about us. All right, so let me tell you something. If you buy a stock and it squeezes and runs up to a certain price, as long as you could get out of it appropriately, then guess what? You'll be all right. You'll be all right. This is why I want you to diversify the brokers that you have. Diversify the brokers that you have. Oh yeah, I'm seeing some idiot hats in the chat. Oh yeah, the idiot hats is loaded up in the chat. Oh, the idiot hats are loaded up in the chat. Oh man, Motley Fool. Okay, let's get it, baby. I'm seeing idiot hats in the chat. That means they ready to see what these 8 lies. Remember, family, who doing these lies? All of us, all of the apes. We just lying. That's according to the Motley Fool. 8 lies. 8 lies. Now, I bet you that we're going to get a kick out of this. We're going to get a kick out of this. 8 lies that have fueled the AMC Entertainment pump and dump scheme. Ready? Let's get it. This is none other than the Motley Fool. And they said this. Let's just go to their points. The key points here, retail investors have gone bananas for AMC, but they'll use deceptive tactics to attract fresh capital. We're using deceptive tactics to attract fresh capital. Oh, look at them. They looking at you. This is, come on now. Come on now. Now, history has conclusively shown that all pump and dump schemes end poorly. All pump and dump schemes end poorly. That's crazy. That's crazy. Y'all ready? Let's get it. Number 1, the hedge fund short selling bankrupts companies. Hedge fund short selling bankrupts companies. So they're saying that a hedge fund over shorting a company will not bankrupt it. This is lie number 1. That hedge fund short selling bankrupts companies. Have you guys ever heard of Toys R Us? Toys R Us. Why are there so many Toys R Us? Well, why are there so few? Or why do they like? Come on now. Let's see if you look it up. Toys. Let's look up what happened to them. Toys R Us bankruptcy. So they're trying to come back from the dead. Shout out to Toys R Us. So look, the company filed Chapter 11 bankruptcy protection on September 18th, 2017. How did they even get into this bad situation at all that they had to file for bankruptcy protection? Short sellers. Shorting the company into oblivion. Why is that important? Because the stock price, let me show you something. You may not have known this, but I just don't have it in my heart to leave you uninformed. Every single one of these companies, let me tell you what the stock market is. We all love the stock market. It is, but let's listen to this. And we're going to go back to the Motley Fool, and let's just touch on this point. Because this is totally against what works and how the stock market works. So they're saying this, lie number 1. There's 8 lies according to them, 8 lies. Hedge funds short selling bankrupts companies. Family. Stock markets, even Apple, even though we know and love Apple, we know and love all of these companies, Disney, the only reason, and I really need you to listen to this, the only reason that companies are selling stocks, aka a piece of their pie, is because they need your money. They need your money in order to grow the company more. They need your money. If they could grow, if Apple, if CCIV, if Bio-Nanogenomics, if Disney, if all of these companies could grow, without your money, they wouldn't be selling you a piece of it. They would not sell you a piece of the company. They literally are selling you a piece of the company for your cash so that they can grow it. So now let's think about the opposite of that. What if they can't get your cash because you won't buy the stock? If they can't get your cash because you won't buy the stock, then guess what? They can't grow the company. It's as simple as that. And this is exactly what happened with Toys R Us when they short companies into bankruptcy. Nobody's buying the stock because there's so much selling pressure on it that you don't want to lose any money. So the next thing you know, you say, nope, I'm not buying that. And the next thing you know, the company is out of business. The company's gone. And then when you go to the mall or wherever you go, you won't see Toys R Us anymore. You won't see them anymore. They couldn't grow. They couldn't sustain the business. All right, now, lie number 2. Shorts have to cover. Let's read this. Lie number 2, shorts have to cover. So I don't know what they're talking about as in the shorts don't have to cover. Well, how does that make sense? So lie number one is ridiculous. We just said that shorting a company doesn't put into bankruptcy. We already know that the only reason that companies are selling shares is so that they can get some of your cash so they could use it to put out the iPhone 13, stuff like that, right? They could use it for research and development. They want to use your cash to make money. So now take a look at this. It says lie number two, shorts have basically, they have to cover. When you look at how short selling works, I don't know if the Motley Fool understands short selling, but if you've been rocking with me, you understand how this works. This is how short selling works. You have a broker, for example, let's call it your prime broker, whoever they are. Then you have Citadel, hypothetically, allegedly, in the middle, right? Allegedly, who knows, right? Who knows, right? So nobody's trying to get sued. So you got your short seller in the middle, and you got the market. The market is us. This is how short selling works. The broker, they have a share of any company. The short seller borrows it. Now the short seller has it. The short seller sells it into the market. It drops in price. The short seller picks it back up for a low price, lower than they bought it. And then they return it. They return it to the broker. They have to cover. When they buy it back from the market, they have to cover. So they're basically saying that step 4 and 5 of exactly how short selling works doesn't work. They're basically saying that short sellers don't have to cover. If you don't have to cover, then it's not a short sell. It's just a sell. It's just a sell. You see what I'm saying? That makes no sense. If I own a stock and then I sell it to you, right? If I own a stock and I sell it to you, it's just a sell. But if I borrow the stock and then sold it to you, now it's a short sell because I have to buy it back and return it. And I'm expecting it to go down. So, all right, we just debunked 2 of them. Let's look at number 3. The short squeeze is coming around the corner. Nobody said that. Nobody said that. To be honest, I don't know who said that. Somebody said, all my daughters are upset because what happened to Toys R Us. That's right. That's right. I'm telling you, they short sellers, they're attacking it. But look at this. The short squeeze is coming around the corner. Now, to be honest with you, I don't know anybody with any kind of credibility. I don't know anybody with any credibility that is basically saying this. I don't know anybody with any credibility that is saying this at all. I've never really even seen somebody say it's around the corner. I've not seen that. All I hear is apes are holding strong and we diamond handing, baby. That's what I've been hearing. And again, my guy, Angel, again, much love, much respect for that super chat, big dog. I appreciate you. Just know. Let's get it. It says this. 4, fundamentals don't matter. Fundamentals don't matter. And just in case you didn't hear me debunk this one, the short squeeze is coming. Nobody said that. Nobody said it's coming soon. They said if we hold, they have to cover. So boom, it is what it is. It is what it is. They've been losing billions and billions of dollars. So the short sellers. Now let's look at this one. Man, my idiot hat is squeezing my brain right now, family. It's squeezing my brain trying to read this. So fundamentals don't matter. In a short squeeze, in this case, this is not a fundamental play. This is a short squeeze play. If you're playing it for the squeeze, then you're not playing it for the fundamentals. It's totally different. This is apples to oranges. Motley Fool. Come on. Hold up. Stop it. Stop it right now. This is not a fundamental play. This is a short squeeze play. Why are people buying AMC stock? Are you buying it because you think that they're going to make so much money that the stock price should go to 100,000? No. Nobody's saying that. What people are saying is that there are so many shorts in this company that they all have to buy them back. And when they do, we headed straight to the promised land, baby. I'll see you there. And if you just getting in, I need to see some idiot hats in the comments. We trying to fuel this idiot hat stuff. Why? Motley Fool. Let's get to number 5. Hedge funds control the mainstream media. This is a lie. Oh my goodness. This is a lie. Family. All right. Let me tell you something. Y'all ready for this? Hedge funds control the mainstream media. This is lie number 5. Let's see if we could debunk that right now. So, Market Watch. If you've been rocking with me, Market Watch. Market Watch is a mainstream media platform. Right? You've seen this. If you've done any research on stock, you've seen this. Yep, here we go. Idiot hats in the chat, baby. Idiot hats in the chat. We doing some Motley Fool debunking live. We keep it real. We keep it raw. We keep, look, this, if you've done any stock research, you've seen Market Watch before. Now let's go and look. Let's take a look. Market Watch, institutional, you know what? Who owns Market Watch? Who owns Market Watch? Market Watch is owned by News Corp. News Corp, look at this. News Corp. Okay. News Corp stock. Institutional ownership. News Corp stock, institutional ownership. Let's see. Fintel. News Corp. Remember the lie that they said we're addressing. They said this. Hedge funds control mainstream media. This is lie number 5. Remember, this is not true. This is a lie, right? Okay. News Corp. Let's see. News Corp. Ticker symbol NWSA. Ready? Let's see. Control F. Oh, look at that. Citadel. They're on for 521. They're on file for picking up stocks. Right? They picked up stocks. And notice that it's gray. Gray on fintel.io means you picked up more. You already owned it. You picked up more. They bought a call option. And then they bought a put to hedge the call in case it goes wrong. Look, I thought they didn't own it. They been owned it because they're picking up more. But then we could go even deeper and see how much money of it they own. What was the ticker symbol? News Corp. I forget the ticker symbol. Raphael, good morning, big dog. Much love. He said he tardy, but he dressed, ready, prepared, got the idiot hat on. Let's get it. What is it? Citadel, the known short seller, Citadel. See if we can find this. Citadel, News Corp. Citadel, News Corp. Institutional ownership. See if we can find this real quick. Oh, look. I debunked this before 100 times. Look at this. News Corp, right? News Corp. We just literally looked this up. Looked this up. And News Corp themselves, basically $169 million worth of News Corp Citadel advisors, right? According to this, hedge funds don't control the mainstream media, right? And on top of that, let's look this up on Twitter. You may remember this. Let's see if I can do a search on here. It was, what was it? It was Motley Fool. What was it? Motley Fool. And shout out to my guy, Gabriel, for this. Much love for the super chat, big dog. And thank you for reminding me of that. Motley Fool. Much love. Appreciate you, big dog. Citadel, they erased this, but they were sponsored. It was a sponsor. Here we go. I think this is it. Yep, here we go. So this was in the web archive. There was a job opening or some sort. The Motley Fool has high-paying jobs, compensation information, expert networks. And this is all allegedly, right? Nobody's trying to get sued, but take a look. It says high-paying jobs, blah, blah, blah. The Motley Fool is a private financial investing advice company based out of Alexandria, Virginia, and it was founded in 1993 by co-chairman, whoever. And look at this. The company is sponsored by Citadel LLC and Melvin Capital. Now, where is this from? This is from the web archive. I just looked this up on Twitter because I knew the screenshot was floating around. It would be easy to find. But I did a whole video on this. Like we said, listen, what are you talking about? Hedge funds don't control the mainstream media. They literally are sponsoring you. What are you talking about? And since apparently you, the Motley Fool, according to them, giving financial advice, allegedly, and you spreading misinformation, that got to be illegal, but allegedly. So it says this: you're obviously short. You're obviously short. To build, I don't even know what they mean by this. Let's see what lie number 6 is, baby. Let's see what lie number 6 is. Somebody said Zuck's sister is behind the Motley Fool. I don't know if that's true. It could be. Show me something, big dog. So it said this: to build on a previous point, AMC's blah 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 inherent ownership basis, anchors, guests, biases, and anchors, guests, and anchors. Wow, they're trying to talk about my guy Charles Payne. Wow, they said, all right, inherent biases and so on, who rail against, let's see. They're trying to help to recruit fresh capital to their cause, trying to create an us versus them mentality. To offer an example, I've personally been told on social media dozens of times that I'm obviously short. Okay, so this is just a personal anecdotal. This one doesn't even count. So, okay, we already crossed this one out. So 6 doesn't count. 6 doesn't count. And then 7, BlackRock and Vanguard are buying AMC stock and it's bullish. Come on. How are you saying that this is not true? How are you saying this is not true when it's literally, I literally just showed you this. So they're saying that BlackRock and Vanguard are buying AMC stock and it's bullish. So you're telling me that they're not? Take a look at this. If Vanguard isn't showing some bullish sentiment for the stock, if they're not, why do they own so much of it? Why are they the top owner of AMC stock? Vanguard and BlackRock are the top 2 owners of AMC stock, and they literally picked up 29 million and 18 million shares. They picked up 29 million and 18 million shares. What is it? What are you talking about? What are you talking about? Notice this. If they picked up 29 million shares, right, and they have 36 million shares, that means they just picked up a whole lot of shares. They just picked up more. They just picked up a crazy amount of shares. They almost picked up their entire position in one buy. Almost. They literally must have had like 7 million almost, and then picked up 29 million. What do you mean they're not bullish? That doesn't make any sense. Look at this. They said that they have 24 now, but they used to have 18. So this is looking like they used to have like 6 million or so, and then they picked up 18 million. How's that not bullish? And it says this is shares owned, and this is shares bought or sold, and they picked up all of these shares. What are you talking about? So, all right, family, they got 8 lies according to them, and we just killed 7 of them. Barely even trying. So, oh my God, they did not just say this. The apes saved AMC. How is this a lie? Family, let me tell you something right now. The apes saved AMC. This is a fact. AMC, as a company, we love AMC, but they were getting buried in debt. AMC was just getting buried in debt. I don't know if I can find a quick picture of it or not, but they were just getting all of this debt, getting so much debt. But guess what? AMC picked up, they sold so many shares this year. That the mainstream media has been talking about dilution. They just been spitting that word out. Dilution, right? Now watch this. How didn't we save AMC? Before, at the beginning of this year, I think AMC, I cannot remember the number of shares. Let's check this out. That AMC had. Let's see if we get some facts going. Okay, so it says that they had 109 million shares. This is just a quick Google search. We could probably find better information, but we're doing this live, so we can just debunk this stuff in the blink of an eye. Let's take a look. It says that the total number of shares of AMC was 109 million in August, right? So basically 1 year ago, and now it's up to 460. So we know it's all the way up over 500. So you know what happened? AMC kept selling shares. They're selling shares and selling shares and selling shares. You know what selling shares does? It raises money. You know what raising money does for a company? It helps them to pay debt, and it helps them to do other things, like get better partnerships. Like, for example, AMC, pay-per-view, AMC, the pay-per-view, somebody said, right, it's so bullish. Exactly. Much love, much respect. Appreciate you for the super chat, big dog. Much love. Just know that. Appreciate you. AMC literally just did the pay-per-view with Conor McGregor, right? They getting all of these, they come on now, come on. They raise money so they could get investors to go get a free thing of popcorn or whatever, right? Some people thought that was funny, but they're showing love to the people who are investing into the company. How do you do this? From raising money. From raising money. They got to stop. They got to stop it. They got to stop it. We just literally debunked all of this. When I do a video later, I'm going to go into more detail and just kill these points. But you just see how just quickly doing a quick Google search, how we just debunked all 8 lies. And let's run through all of the lies. Just read them. Let's just read them. Lie number 1, hedge funds are shorting the companies, bankrupt the companies. That's lie number 1, supposedly. Lie number 2, the shorts have to cover. Lie number 3, that short squeeze is coming around the corner. Lie number 4, fundamentals don't matter. Lie number 5, hedge funds control the mainstream media. Lie number 6, you're obviously short, which is him talking about his personal experience or whatever, or her, whoever posted this. And then lie number 7, and this one may not be a lie, but this shouldn't even be on the list. But all right, number 7, BlackRock and Vanguard are buying stock means that they're bullish. They just loaded up and basically gained their whole position. All right, and then Apes save AMC is a lie too, apparently. That's crazy. Oh, why did they say that? They said apes save AMC. If anything, apes are purposely harming AMC by the hands of CEO Adam Aron shooting down an opportunity to get existing share and raising money for the company. Why is that crazy? And why is that important? Because they've already raised so much money on AMC that they're good at least until 2022. And this is according to them. Somebody said, just posted the link in the Discord. Appreciate you, big dog. Much love for that. Shout out to the Discord family in the building. Shout out to y'all. Let's get it. But again, I'm telling you, you got to have your idiot hat on nice and tight it's going to break your brain one day. Let's get it. This is crazy. This is just craziness. And it's every day. And you know what? It's even worse than every day. It's even worse. Control F. It's worse than every day. Let's look up MOT. Look at this. Today is the 12th. And today, how many articles did the Motley Fool post about AMC? We got 1, 2, 3, 4. Or 3. Yep, they posted 3 today. Notice, family, the market has been open for an hour and a half. And they already posted 3 articles. About AMC. But in the last 3 days, they posted like 10 articles. Come on now. Tina, I appreciate you for that. Much love, much respect. That's right. Somebody said it's a circus out here. Listen, it is. And the thing is this. I was reading an article from them the other day. I forget what it was called. And it was something about how the most pessimistic analysts are saying the stock is going to drop. Why would you ever listen to the most pessimistic of anything? Why would you listen to the most pessimistic of anything? And why would you listen to the most optimistic of anything? What you want to do is listen to the most realistic. You want to listen to the most realistic. You don't want to listen to the most optimistic. You want to listen to the most pessimistic. You want to listen to the most realistic. That's how you make an informed decision. This is it. Apes care about their agenda and not the company. This is it. Control F. Let's see. Analysts. Let's look up analysts. And Let's look up the word analyst and let's see. I'm pretty sure this is the article. Maybe it's not. Whatever the case, they're basically saying that the stock is going to $1. They're saying the stock is going to $1. It is what it is. Take it as it is. Nope, I don't see it. Maybe it's not this article. Either way, never listen to the most pessimistic, never listen to the most optimistic. You know what I'm saying, family? Listen, you gotta make sense. It gotta make sense. Somebody said AMC 716 calls. 716 calls. Let's take a look. This is high risk, high reward. 716 calls, high risk, high reward. So, okay. Now, if you were to get a 716 call, then potentially, let's look it up. Like I always tell you, if you want to know if you should do a call or not, go to the options calculator. Go to the options calculator. And all right, so let's see. Long call, all right, we're on it. So then look up AMC, $44 according to them. And let's go to option, July 16th. Let's look it up. So let's say you wanted to buy a call option for, and this is hypothetically, I'm not buying this, I'm just showing you. Now take a look at this. If we wanted to buy a call option for, let's say a $50 call option. $50 call option for Friday. If you go to the ask, you're going to pay $128. Look at this, $128. And let's say that it was going to go up to 55 in this time, hypothetically. This is our range. This is what that option looks like. If it stayed where it is right now, you would lose all of your money by Friday. Even if it went to $50 flat, you would lose all of your money by Friday. Remember, we don't hold, you can do what you want, but we do not hold these call options till the expiration because you lose so much money over time due to theta. But if you were to buy that and it went to $50 today, you would basically make 170% of your money. But if it remained flat, you would lose basically half of your money every single day. And you would be out of money, basically. You just lose all of it, basically by Thursday. Or no, Friday. That's how that would work. That's what we talking about, baby. Somebody said, I just bought 250 AMC. Let's get it. Somebody said, why would it spike right now? Buying pressure. People, look, when I see a price I like, I strike. That's how it happens. Also, when you put the tiers in the chat, that's another way to get it to run. Listen, one thing I'm going to start to do is if I buy an AMC call that's super high risk, high reward, short term, I'm just going to buy the call, put some tiers in the chat, and then sell a call immediately. You can sell a call as soon as you buy it. As soon as you buy it, you can sell it. As soon as you buy it, just remember, you can sell it. That's how it works. Somebody said, yeah, that's risky. It's risky. Somebody said, I like the price. That's right, Jay. That's right. That's how we win. Big dog. That's how we getting down. That's how we win. That's how we win. That's how we doing it. So now I am actually looking up AMC calls. However, remember I was telling you this. It's looking like it's time to start buying puts. Now, I'm not saying you need to load up on 1 million puts, but it's looking like, where can I find that calculator? Options calculator on Google. Options calculator is the very first thing. Somebody said, you're the man. I got you, big dog. Appreciate you for that. Just know. And I'm seeing people trying to get into the Discord. I got you, Discord family. I got you. Just know that. But again, it's looking like, it's quacking like it's time to buy some put options on some of these stocks. Let's look up some of the other ones that have been running. Not saying that you should buy a put on this, but let's just see what's going on with these stocks. 50 to 41. Whoa. I was telling people that it may have been time to sell the news. Oh, I wanted to do a put option on this one too. I did, but I didn't. I didn't do it. But I wanted to get a put on Virgin Galactic. That's why I just showed y'all just now. Oh, you know what, family? There will always be another play. So now, how that would have worked is like this. You see how I got up to 54? Let's say hypothetically, what you do is you buy a put option, right? So when you buy a call, and pay attention to this, make sure you pay attention. When you buy a call option and the stock is 54, let's say you buy it at the money, right? Let's say you buy it at the money. Basically, what you do is this. You buy a call option that's at the money, and then if the stock runs up, then that means you could sell it. Hypothetically, let's say, just look at this. Let's say you bought a call option for 54 and it went up to 100. That means that you could basically sell it or buy it at 54. But if you bought a put, this means you could sell it at 54 if you bought that one. And then you would have been able to sell this stock, even though it came all the way down to 51, 41, you'd have been able to sell it. You'd have been able to sell it. Somebody said Tesla is running. Let me tell you something, family. My two biggest positions right now are Apple and Tesla, because I loaded up real low, and next thing you know, boom, they ran up like crazy, right? Shout out to Italy. I see you, big dog. Let's get it. But yeah, they ran up like crazy, and now they my biggest positions. But I believe in these companies a lot. But I wanted to short this. I'm not gonna lie. I didn't do it, but I wanted to. There will always be another play. Remember that. Somebody said, look at Tesla. Let's do it. Whoa. I keep clicking on the wrong one. TSLA. Okay, Tesla, I see you. Tesla's up 3%. Let's get it, Tesla. Let's get it. Somebody said they just joined the Discord. Let's get it. I see you, Donnell Inglewood in the building. Somebody said he sold his Virgin Galactic shares. But again, people sell the news. Somebody just sent me a super chat. Lewis, much love, much respect. Appreciate you, big dog. He said he finally got his position, 1,000 shares on AMC. His average price is 17. Now he gonna sit on his eggs until they hatch. That's what I'm talking about, baby. I'm holding for you. Diamond hands, baby. And my guy, he said this. Nio is on a run. Bro, he a daily follower. Let's get it. Much love and much respect. Just know it's always love, baby. It's always love. And you know what's crazy right now? That, like, dang, I wanted to short that. I'm telling you. Look, there will always be another play. And when you short a stock, I just want you to know, high risk, high reward. But this would have been a real high reward. Let's actually go and let's take a look. So let's do a naked put. So writing or selling a put or naked put has limited but immediate return, but expresses the trader to a large amount of downside risk. You can always lose your money. So here we go. Let's do SPCE. And let's say we were to buy the $50 strike. Or 54, because that's where it was. Oh, this is the price of it now. But back then, it was probably like double. What was that, 1.6? And let's see if it was to go to 30. Did I write this up wrong? 100. Oh, I changed it to buy. But again, let's see. Naked. Let's go back to, what was it? 50. These are the current prices, so this won't work. These are the current prices, but I needed the past price to calculate what, and I don't know what it was. I don't know what the put price would have been when Virgin Galactic was up at 54. I don't know what it would have been. We could kind of backtrack and look at the options and try to like make it make sense by looking at delta and gamma. But that would have been a crazy high risk play, fam. But it would have turned out a lot. It would have turned out a lot. Somebody said change the stock price. Oh yeah. That's a good idea. I forgot about that. You're right.
when the stock price was 54, we making a huge assumption here with this. With this 1.6, we're making a huge assumption. Huge assumption here. Huge assumption here. Because we have no idea what it could have been. But let's look at the delta and gamma again. Delta tells you how much money. Let's take a look at the calls. In this one, right? If you buy a call, delta tells you how much money your option is going to go up if your option goes up $1, or if the stock goes up $1, the underlying stock, right? So what does that mean is this. It means that if you buy AMC, or no, this is AMC, this is Virgin Galactic. So if you were to buy a Virgin Galactic call right now, and you were to buy the $44 strike, and this is date July 16th, and it went up $1, you would immediately make $55 just from this thing moving up $1, right? And the opposite is true for puts, right? The opposite is true for puts. If it went up $1, you would have lost, you would have lost $44. But if it went down $1, boom. Man, family, I'm telling you right now, you know how bad I was thinking about this. I was thinking. Puts on Virgin Galactic. But the thing is this, I hate making money with these short selling hedge funds. I don't want to do it. But I won't do it on AMC. I'm willing to make money doing that on other ones. Somebody said we need the price to go up so we could buy and hold. Let's see one more time. AMC. Somebody said thoughts on puts on STMP. Thanks for all the advice. Somebody, my boy Randy said the billionaire took himself to space and now wants to dilute your shares. I even heard that he didn't even really go to space. I heard space was right here, and then he got like right here. I don't know. I'm not the judge of what space is. I'm not the judge of that. STMP. Much love. Appreciate you for the super chat, big dog. Let's check them out. Puts on them? Maybe. It's really flat. It's really flat. So if you did get a put on this, big dog, like, it's been crazy flat. Let's look at the 30-minute. It did gap up a lot. If you do a put, give yourself some time on that. Because look how flat this is. And it's looking like the volume, it looks like, let's see. Yeah, the volume is low. The volume is really low. Check the liquidity on this, family. Check the liquidity on this. Oh yeah, also family, before we get out of here, I want you to see this. If you ever go and buy an option, just so you make sure, I want you to know and recognize this. No one recognize this. Make sure that you have some open interest on your options. You need open interest on your options. For example, let's go to Apple. Let's go to AMC. Look at the open interest. This is telling you basically how many people or institutions or whatever is going on is interested in this. Look at this. The open interest on the $40 call for July 16th is 10,000. It's 10,000. There's a lot of people interested in this one. You want to make sure that you could get out of these plays. You want to make sure that people are interested in them. You could get out of these plays. And then this one, 16 for the $50 strike. $50 strike. So currently these are out of the money, but there's a lot of open interest. If you see the ones with super low open interest, like crazy low, you might want to think of getting closer to more open interest. Like for example, they got the $70 strike for July 16th. That's a lot of people going for that. $36,000 for the $100 strike. They must have been holding on to this for a long time. 36,000, that's crazy. And then 145, 52. People are diamond handing options. Make sure that you don't diamond hand options. Not financial advice. Don't diamond hand no options. Don't do it. Don't do it. Don't diamond handle option. I better not see you diamond handle options. Options are not stocks. Options are not stocks. You roll, baby. Roll, baby. Roll. All right. So now, let's check out Nio again. Let's check out Nio real quick. See what Nio's doing. Nio's doing okay. Okay-ish. It's basically flat on a day. Let's check VTI one more time. VTI, Vanguard Total Stock Market Index Fund, is flat again. Let's check out Apple. Apple came down to 144. In the recent past, Apple has come down from 144 to 140 in the last few days. But this is not really a move for a company like Apple. Let's look at the options on Apple. Let's go to the chart. So my Discord family, I'm looking at options for Apple. But we're going to look at something that's more long term to just hold on because the market is getting volatile. So let's take a look, right? Let's take a look. Let's say, and notice, the lower the risk, the lower the reward. Somebody say, you still got the Nio options? Yeah, I do. I do. We still got a lot of time on them, baby. We still got a lot of time. Somebody said Disney is running. Let's go, Disney. All right, let's get it. Somebody said, should I buy AMC right now? If you can spend money on it that you're willing to lose, you got to have diamond hands to win this play. It's so manipulated that you need diamond hands, baby. You need diamond hands. But okay, Apple. January 2022. No, that's too soon. January 2023. Apple's a slow mover. Let's see. Let's see. Deep in the money, you got to put some bread up. You have to put some bread up if you get there. So this one, deep in the money, not deep in the money, somewhat in the money. So we got the $40 call for 2023. Let's take a look at the options chart here. So let's go to Apple, AAPL. That's not an L, AAPL. See the stock price, should be 144. 145 or so, but that's not the real price, is it? Yeah, it is. It is. What are we trying to do? Oh, we still on puts. We gotta go to calls. AAPL. Let's do it. Call. Let's say we're to buy an option for January 2023. January 2023. And again, you got to put some bread up. You got to put some bread up. This is not a cheap one. But we're just looking to see what's going on with that. And if we bought basically at the money or AKA in the money somewhere around, boom. Let's see. Let's say that this could go up to 175 in that time. However, stock analysts think it's going higher than that. So basically, if by March, this went up to 165, you will make 34% on your money. By March, keep in mind, the stock market is supposed to move 10% a year. 10% a year. Now, if it went up to 170 by expiration, 171, you would have made 20% on it. And Apple is supposed to go even higher than that by then. So let's look. Let's up this a little bit because Apple can probably get to 190 in that same time frame. Shout out to Apple. Apple is a big dog, a banger, a beast. This is financial advice. Apple is a banger. Let's get it. All right. So that's all we got with that. So I want y'all to know this. This is not financial advice. I just hope you brought your oven mitts, baby, because it's about to get hot in the kitchen. Now, don't invest in companies you don't understand and don't believe in, because if they dip, you not going to buy the dip, and then you're going to sell low and be right back here crying to me, and I'm not having that. So if you can't do the heat of these hot stocks, just stay out of the kitchen and consider investing in the index funds. Discord family,